Hello there, traders. Hope everybody is doing good. Give everybody a couple of minutes to jump in the stream as per usual. Let me know what you guys have been up to. Big day in the markets, not necessarily in the US markets. It is the 4th of July celebrations today in the US, so we're not going to see much going on in this US session, but we do have some big data to come. I'm going to go over a couple of the trading ideas that we had this week and just going to kind of go over what we've done, how we saw the markets kind of setting up this week, and yeah, how they performed. Had a really solid trade on Aussie Swiss longs this week, and that performed very, very nicely, which you can see just in here. About a 5R trade in the end. So I'm going to go over that with you, why I took that position in the first place and sort of the conclusion of that trade. And then we're going to go over some of the markets as well. We're going to take a look at our gold market, because gold was something that we like the idea of being a buyer this week. And we were looking ultimately for the breakout of this consolidation, which we had early on Wednesday. Market went all the way to targets as well. So we're going to discuss a couple of these different markets today, and obviously discuss a little bit about the UK election, a couple of charts to watch in terms of the UK election. I am going to do a webinar this evening. So if you are a Blueberry Markets client and you're watching the live stream, check your emails. You should have had an email about a webinar that you can sort of register to watch later. Who have we got in then? So we've got Azalano. Hello, John. I hope you're doing well. I hope you're doing well too. Hello, Rothschild, and hello to Bruce. So thank you for everybody for joining in. If you could leave the stream a like before we get started. Likes are free. It helps me boost the channel and give it a little bit more of a reach. So if you find any information that you feel is useful that you would share with other people, then let me know. Rothschild, are you only doing those? I'd like to also check on Bitcoin and Aussie CAD. No, suggestions are more than welcome here. So if you want to check out Bitcoin and Aussie CAD, we can go do that as well. That's no problem at all. But yeah, so to be honest, let's start off with those then. Let's start off with Bitcoin. We'll give opportunity to everybody that's coming in at the moment. We'll start off with the cryptocurrency, which is having a bad time at the moment, having a very, very bad time at the moment. The last time we kind of looked at Bitcoin was this breakout here of this kind of head and shoulders pattern, and the market went higher. But Bitcoin's having a little bit of a troublesome time at the moment. Our initial sort of downside targets for Bitcoin was down towards this 52K handle area, which is an area I really like for opportunities to the upside. So not really surprised in the price action that we're seeing right now. Obviously, this is going to create a little bit of fear in the market, especially amongst those that trade Bitcoin and hold Bitcoin. We're going to see a bit of a pullback coming into this market now. And I really do like this 52K area. I even like the sort of 43 areas if you're looking to be a buyer of the market. Essentially, this consolidation pattern that formed down here is an area where volume has been built. And you can see, obviously, lots of buying volume from there. So, I mean, nothing more than that, really. I don't really know what's driving this downside pressure. Maybe just a lot of offloading of Bitcoin. I haven't really looked into why we're getting this offload at the moment. You know, typically it used to be when large sort of miners that held large quantities of Bitcoin offloaded a load of their coin back onto the servers and or into the markets, and we used to have this kind of pouring of Bitcoin coming through, but I haven't checked the analytics on that, to be honest. I haven't checked anything with that, so I haven't seen much. We've also got the potential for the risk assets in the market just getting a little bit of a beating at the moment, especially when it comes to the weeks that we've had with large high impact news events. Then, you know, we've got this potential move away from the risk assets and a move into more safe haven products like gold that we're seeing at the moment. So gold benefiting from that kind of risk value, and then we're seeing a lot of downside in riskier assets like Bitcoin. Azalano didn't get the webinar email. Just check your spam folder. Just check your spam folder. If you are a Blueberry client, you should potentially have had one. Depends where they've sent it out to, but have a little look in your spam folder. What else have we got here? CG, hello to you too. And can you also take a look at dollar, CAD, and euro pound? Yeah, we'll come on to euro pound definitely in a little bit. Rothschild, there was a token institution yesterday, higher supply, hopped in yesterday after lower than expected ISM services. Okay, yeah, so there was some a little bit of selling in the tokens, then yeah, higher supply would create that downside pressure. There used to be a cryptocurrency sort of analytic website that I used to have a little look at. I can't remember the name of it, but they used to kind of show you the top miners and when they'd offloaded positions, and you could actually pinpoint on the chart the exact moments that they had dropped Bitcoin back into supply, and it kind of correlated perfectly with the fall in price. I can't remember what that was called though. I'll have to do some digging around, see if I can dig that out at some point. But definitely something to kind of keep your eye on is looking at the supply. But yeah, so Bitcoin on a bit of a fall. Let's go through some of those CAD pairs then. So we've been heavily buying CAD on the channel. You know, we like the idea of being a buyer of CAD at the moment. Been very bearish on dollar CAD through this move that we've had recently. Still like the idea of being sort of Kiwi CAD short. I was looking at potential shorts yesterday, but I didn't bother trading it in the end. Just kind of called all my positions at the moment. Just kind of went flat going into the end of the week. But yeah, really liked CAD positions in the market. And obviously, Rothschild wants to take a look at Aussie CAD, and then Azalano wants to take a look at dollar CAD. So let's go have a little look at Aussie CAD first. Now, Aussie CAD, not my favorite market to go and trade at the minute, simply because of the price action as well as the sort of fundamentals within the market. You know, these are two sort of stronger currencies at the moment. And although we're seeing this kind of upward channel being created on Aussie CAD, it's really difficult to try and get in on the positions unless you're basically trying to trade from the swing lows and the swing highs, you know, short from highs, long from lows. You know, if I take a look at the currency strength meter, you know, Aussie's at +5, CAD's at +5. So really speaking, two currencies that are getting stronger against one another can create this price action here where you've got that sort of chop on the daily time frame. So that's something I try to avoid. So Aussie CAD for me is a range play market. You want to be looking at range plays. You want to be looking to try and sell from highs, buy from lows in that case. So at the moment we are coming into highs. You might want to try and look for some range positioning on here. But we've had some really positive data out of Australia. We've had some decent data out of Canada, higher inflation figures. So everything's really pointing towards this market remaining a little bit range bound. Now, dollar CAD, on the other hand, is quite interesting. Again, dollar CAD, a market that we've been talking about seeing a little bit of downside on, and we're back nearly at that 136. Basically, my calls for dollar CAD for the pretty much since May has been a breakout of this 136 level, and every time we've come into it, price seems to be finding some support. You know, I like the idea of being a buyer of CAD, but do I like the idea of it necessarily against the US dollar? Not really, but you can see why. You know, you can see why. Again, the exact same reasoning as to why I was just showing you Aussie CAD. You've got dollar CAD, dollar at +4. Let me just zoom in a little bit here so you can see this a little bit better. US dollar at +4, CAD at +5. You know, that's why we're getting this market here, where the market is ranging between that sort of 136 handle and sort of the 137, 138s, right? So just in this kind of area in here, 137.70s. That's why we've got this range here, because the two currencies are strong. Market just looking to sell highs, buy from lows, and we're coming into the 136 handle now. Now, I really like CAD strength. The reason why we like CAD strength is because of the commitment to trade reports that we've been through over the past couple of weeks have shown some potential strength coming for CAD. If you look at the futures market, go and look at the commitment to trade reports, it shows the highest level of buying from commercials since the 80s. So there is a significant position size going in on Canadian dollar futures, which is, if you look at a CAD futures chart, dollar CAD is just pretty much the inverse of that. So I like the idea of you know, trying to find the opportunities here for opportunities basically on dollar CAD. Although, you know, for me, because I'm such a strong CAD buyer, I'd probably be looking more for shorts from the top of the range than I would be looking to go long at the lows of the range here. I like the idea that if price breaks through this 136, we've got huge amounts of volume to go and test in this little zone in here. So I really do think that we could probably go down to sort of the 135 handle. And if we can breach past that, there's a lot of areas that price could take. Whether we would break through that is a different question. Obviously, we have to wait to see if buyers and sellers want to try and battle in and around these areas and see if the sellers can win. I have to wait and see there. But if you want to be a buyer of CAD, you want to go look at your weaker currencies, one of those being CAD Swiss. You know, if we look at the Swiss franc at the moment, we've just had an inflation print, which is coming lower. We've got core CPI coming in lower as well, which is a little bit better if you're looking at those inflationary figures. So the one currency pair that I really like the look of is CAD Swiss. I haven't traded this market long yet because of where price is. You know, I was kind of looking to try and get in long in this market, but you can see we've got this overall sort of consolidation here, which would have built a lot of volume. If I just drag this volume profile across, you can see that volume being traded within this area here, and the market can reject that. And you see that we're trying to see a little bit of selling at the moment. I think fundamentally this market is great to go and trade, but we also have to kind of look at it from a technical point of view and say to ourselves, where's the best place to get involved with this? Where is the place to try and be a buyer of CAD Swiss? Let me just take the anchored VWAP off, and I'll just take the 50 MA off as well, because what I'm ultimately looking at is, we'll just open up this 30-minute time frame here. Let's just take it to an hourly, actually, just to give you a perspective of what I'm trying to sort of look for. Obviously, we had this consolidation in here, large move. That was from the Swiss National Bank cutting interest rates. So they've cut interest rates. They've basically, after cutting interest rates, have said that they want a weaker Swiss franc. So then we see that sort of continuation of a move up here. Now you've got the opposite from, then you've got the sort of, sorry, not the opposite from the Bank of Canada, but you have got the idea that the commitment to trade reports, commercials are buying the most they've ever done since the 80s on CAD. So we want to be CAD Swiss long, right? We want to be CAD Swiss long, but we need to do it at sensible areas. We don't just want to get involved just to get involved, you know, because we know that the markets don't just move in straight lines. They pull back and they consolidate and things like that. So really speaking, I'm looking at one or two areas. My first kind of area that I'm looking at is in and around 65.80. You can see that consolidation that was built in here. If you look left, it's this kind of little pocket of volume that developed. Now, the most traded volume area is around 65.50s. So that is kind of in this little zone in here. Okay, and then you've got bits of pockets down here, and then obviously you've got large volumes that form down at these swing lows. So ultimately, you know, where's the ideal place to buy? Now, if I was really selfish, then it would be down all the way back at this 64.40, but the likelihood of price coming back to that now is very low. It's very low in this type of market condition. So I'm looking basically for an area of support, sort of midterm. I mean, on this daily chart, that sort of bearish candle there looks pretty good if you were a supply and demand trader. So really speaking, if we did find or if we didn't find support here and price came down into 65.50, that's where I'd want to be looking to be a buyer of this market right now. At the moment, like I said, we're coming into a bit of resistance here. This is volume in here. You know, the market's coming up towards this point. So I don't really want to buy at resistance levels. I want to, if anything, put yourself in the picture of the person that's been long down through at 64.40. They're probably going to want to take some profits off here. So I don't want to get involved there. I want to get involved a little bit lower. So if price can come back down to sort of 65.50, then I'll be a lot happier. And obviously that then goes very much in line with what's happening on the markets. We can see the Swiss franc losing a lot of ground, the Canadian dollar picking up some ground. So that's why I want to be buying that market in particular. Azalano, check my email. Nothing on my Blueberry Markets client, by the way. Okay, just drop your, if you don't mind, drop in your email in the chat. I'll send it over to you. But just let me know. Let's talk about divergence on dollar CAD, disinflation on the US and Canada. This is more of a range bound for the time being. Yeah, potentially. You know, the idea is obviously the Bank of Canada are looking to bring rates lower. They did cut interest rates. Their inflation picture hasn't looked that pretty since that. I mean, it was only one print, so we've got to take a look at the sort of the average of that move down. And the average hasn't been too bad in Canada, but I would be a little bit cautious on trying to read what the Bank of Canada is going to do right now. There's a bit of a mixed picture coming from that, isn't there? We've got Bank of Canada looking to cut rates, but inflation not really coming in a lot lower. So I'm looking more at the signal of the commitment of traders right now, rather than looking at what's going on in terms of inflation. We do obviously have data coming up in Canada tomorrow. We've got the unemployment rate and the employment change, and the unemployment rate is set to rise again to 6.4%, which the Bank of Canada will not be happy with. They will not be happy with. So if anything, I think the Bank of Canada are probably looking more towards another cut. Obviously they would like inflation to come in a little bit lower than it has been. Then what was the last reading? 2.9%, was it? Can't quite remember off the top of my head. Let me go and have a quick look at the employment figures. Which go indicators here. Unemployment rate. Let's have a look. So yeah, Canada was previously 6.2%, forecast to come in at 6.4%. And if we go look at the inflation rate in Canada, yeah, rose to 2.9%. So a little bit sticky. You know, the highs were around about 4% in August 2023. Obviously, it was a lot higher than that in June of 2022, up at 8.1%. But the overall average has been down. It's like every other economy that we're seeing at the moment. There's this like sticky inflation going on, especially in like the US and Canada as well. So it was a little bit surprising that the Bank of Canada did cut rates, but I think it was more down to the unemployment rate than it was the inflation rate. And yeah, we'll see if that damages anything. You know, cutting unemployment, cutting rates will obviously influence borrowing at lower costs. Obviously, that can influence them businesses and things like that. So yeah, you know, there's potential for the market to you know, continue lower, or the rates to come in lower. As a lie, thanks, John. No worries. Tabo is I'm looking for dollar Swiss longs. Yeah, dollar Swiss longs aren't bad at the moment. Let's have a look at dollar Swiss. So just broken back within this range. So I mean, look at that setup there. Sorry, guys, but that is a beautiful setup. If you trade volume, you'll know that this consolidation here would just have loads of volume within it. And I don't want to bet you, but I bet there was a look at that reaction right from the high volume zone within that consolidation. That would have been a nice setup on a short-term move to the downside if you were looking at trying to trade the data yesterday. But overall, yeah, I kind of like dollar Swiss upside. Dollar's a bit touchy at the moment. Dollar is a little bit touchy. We've got this kind of zone in here that we could potentially work with as well on the daily chart. But yeah, dollar's a little bit, it's hard, right? Because I'm a dollar bull. I like the idea of dollar being bullish in the long term, or mid to long term at least, because we're in an election cycle year. Typically in an election year, the dollar can get stronger from sort of August to November. Usually after the election is announced as well, the dollar can remain fairly strong. So I'm looking at seasonal play for the dollar to be bullish. Obviously, if we look at the central bank speech at the moment, the Fed happy to leave rates higher for longer. The data, on the other hand, is starting to come in a lot lower. You know, we saw the ADP non-farm employment change coming lower yesterday. We saw ISM services PMI drop considerably lower at sort of 48.8. So the data is now starting to maybe look more towards a cut for the Federal Reserve than it is a sort of hike or a hold. I'll be interested to see how NFP plays out tomorrow. NFP will be very, very big, I think. You know, again, if we start to see that unemployment rate tick up in the US, then it's going to be very, very interesting to see how the market then sees a cut. You know, the market's kind of pricing a cut for September still, I believe. Let's go and have a little look at that. We'll just go to the CME Fed watch tool. I will bring that on the screen. So the CME Fed watch tool, if nobody has seen this before, basically just, you know, it's a little thing that shows you the likelihood of the Fed changing their target rate. It gives you the, you know, when you see on Bloomberg, the talk about the dot plot and things like that, you can come and see that. Here, you can go into the dot plot and see the projections and stuff. So if you are interested in looking at that, then you can. But basically, you want to just go over to the target rate up here and have a little look at the sort of current situation. You know, everyone was expecting the Fed to kind of hold rates this month, and you can see that 91.2% expected of a hold here. But then we go to September. And this has changed quite a lot. This has actually changed quite a lot, because back on the 4th of June here, you can see that the chances of a rate cut was around about 56.4%. Well, arguably 60%, 66%. And that's now jumped up to 72.6%. Okay, so the market is feeling more likely that we are going to see a rate cut in September now, which is interesting because that will just come in just before the election. I'm on the fence on that. I don't know whether they will cut going into an election. I feel like they might just leave rates a little bit higher for longer. But again, I think this is going to come down to sort of the NFP data that's coming out. It's going to come down to the core PCE, which did drop to 0.1%. So yeah, it's interesting times at the moment. So, you know, I'm kind of on the fence on the US dollar right now. You know, I like the idea of being a buyer on the midterm, but what if they do start kind of talking about cutting rates? The recent FOMC meeting minutes kind of highlighted that, yes, they all felt that the data was averaging lower. They do feel that the rates being higher is restrictive, and there was also potential, though, for them to kind of look at it and go, well, we could still hike if, you know, inflation comes back in a little bit hotter. So they're still watching inflation. That I think the real problem is going to be with the labour market. I do feel if we start to see some real sort of hemorrhaging of the labour market, that's when they will aggressively cut interest rates. So let's see what happens with this. Market is now pricing in 72.6%. I mean, the last NFP figure, I think, came in a lot higher at like 227s, I think it was, which was a little bit unexpected. So if we get another print higher, then that could put that into doubt, you know, and that's what the market's trying to play at the moment. We're trying to play this game of chess of who's going to cut interest rates, who's not, you know, and that's where the sort of the trade lies essentially for me on a macro outlook. But sorry, let's get back to dollar Swiss just from a technical perspective. Come down into this little volume zone now. You can see we reacted from it initially, but I don't mind dollar Swiss longs, to be honest, especially because you're kind of in this area here. Markets come down. We've kind of had that sort of change of the higher high situation now. You know, the market could start pushing back higher. Do I like it where it's at? You know, probably no, but like if you've got this kind of little pause in the market down through here, that could be quite interesting to see if price can pull back down to sort of 89.50. Just looking at the hourly chart here, that would coincide with this kind of consolidation that formed within the market. And you know me, I like to trade from those consolidation points. Also a good level of volume. We actually have a little bit of a higher volume level zone just a little bit above that, which is sort of 89.80s. So, you know, maybe that's a good area to look for an opportunity back to the upside. So I would be, if you wanted to be a buyer of dollar Swiss, I'd be looking in this zone here or in this zone here to have a little look for those opportunities within the market. No worries, Chris. Good afternoon, Vincent. I don't know if I already give you a shout out, but I can't remember. But if I haven't, then welcome to the live stream. Hope you're doing well, mate. Can you also give your insights on dollar, yen, pound yen, and Aussie yen? Yeah, sure. The yen market is super interesting. Yen market is super interesting. I am very much staying away from the Japanese yen at the moment. Japanese yen for me is a market that I think we'll probably see some more upside on. But I don't want to buy it where it's at either. You know, it's just at a point where I just feel there's no, you know, return for me. I mean, I do quite like this sort of 160, 78 area. Again, if I just kind of put a little volume profile on there, you'll see that there's that high volume node through there that's being respected at the moment. But, you know, I'm being very selfish when it comes to dollar yen and things like that. I want to know, well, I don't want to know, but I want to ultimately wait for intervention to come so that I can buy it back up after intervention. So dollar yen, for instance, here, I like this sort of 170, 157 handle, basically, just in here. We've got all this kind of volume that's going across there. Now, typically in an intervention, the last couple that we've seen about a 500 pip retracement. So 161s at the moment, that would be about a 400 pip. A 500 pip would bring us into sort of this area here, sort of 155, 75. So, you know, if we did get some kind of intervention in the market, this is where I think we would be kind of heading for, down towards these kind of areas in here. So I would like to potentially buy it back, because we've got to also understand that the BOJ haven't really changed anything. The only thing they've said is they're going to intervene if there is sharp price movements. So that to me is, if we get some volatility coming back into the market, dollar strengthens aggressively for whatever reason, then they're going to intervene at that point. But they're not really putting a number on it this time. They're not going to say, you know, everyone thought 160 would be the area that they did it. So I was the same. I went short 159.90. I then proceeded to buy it back up because the BOJ are not changing their rhetoric. The one thing that we're going to have to keep an eye on is the CPI data coming out of Tokyo. Obviously, inflation rising in Japan would be the one thing that would want to see action from the Bank of Japan. I'm not seeing that yet. So, and the indicator, obviously, macro indicators are lagging as well. You get kind of the previous month's data. So we're going to have to see. We're going to have to just wait and see what the stance is on the yen. But at the moment, this is a great sort of long opportunity for most. You've got a nice carry trade going on here as well, which basically means you earn as you hold it. You don't really have to do much. But yeah, for me, I'm being selfish. I want to see 157. 157 is my target for dollar yen in terms of wanting to buy it. Would I want to sell here to get to that point? Absolutely not, because this could go all the way up into 164s before it starts to make any kind of waves lower. So yeah, for me, I don't really want to be involved with yen. I mean, I really like the idea of Aussie yen. My currency strength meter has basically been telling me to buy this for like the past 3 weeks, and I haven't bought it once, because I just didn't want to get involved with the Japanese yen too much. Obviously, I did get a little bit of exposure to dollar yen, but Aussie's been brilliant. RBA is one of those that could potentially hike interest rates again to try and keep that sort of inflation picture down. Inflation not looking very good in this market in Australia at all. But again, where do you want to be long from? You got to look at it a bit selfishly sometimes. And I'll look at it always in terms of risk and reward. The only way I'd be getting long in these type of markets is very, very short term. I would not be looking to hold it very long. And I know the majority of people that trade the markets are swing traders, especially from a retail side. So if I was a swing trader, let's say, I went long, and just as a swing trader, I put my stop loss below the daily swing low. I need the market to move 83 pips in my favor to even get a 1-to-1 risk reward ratio. And I mean, that's fine, right? You're looking at being a buyer of that market. You might even be looking at a 4-hour sort of swing trade. Just go to the 4-hour chart on the right hand side here. You might be looking at something in here where you've got this kind of consolidation, looking to be a buyer or whatever. So yeah, let's just say like you're looking to be a buyer a little bit lower, stop loss below the lows. Looking to just kind of cover your position like this. And then the market goes up there. Great. You've got a nice sort of 2-to-1 risk reward trade. But if I go down here and I look for the opportunity and I say to myself, well, I've got this volume level down through here. I can have a safety stop below the swing low and then look to go and target back up towards the swing high there that could form here. A nice healthy risk reward ratio. Market has not got to do too much in terms of a lot of work to do. You could even go with sort of tighter entries down in this zone down through here, and that's the way I like to look at it. I like to use the higher time frames to kind of pinpoint bigger areas to trade from, and then going on my lower time frames to try and get a better risk reward ratio. Also, market has to move less for me to get more out of it. So yeah, I mean, Aussie yen I quite like. I mean, CAD yen I really like. I think if you're going to be a buyer of one, CAD yen would have been the one. I did a lot of analysis on this recently. We got that sort of soft intervention there. We've broken through that. Market has continued to push higher, and CAD yen just hasn't really been pulling back too much. And it's one of those markets. You're looking at this parabolic move that's kind of happened, and you start to become emotional. You start to feel like you've missed out. You're gonna FOMO on the move essentially. And this is a classic sort of FOMO setup, right? You've got all this bullish price action. The market's moved incredibly well over the past month or so, and then you see this pin candle here, and you think, yeah, I want to buy that pin candle, stop loss below the low, and lo and behold, that'll probably be the one that loses. You don't want to get on the fear move. You want to get on the sensible move. Where's the sensible place where you're going to be able to allocate risk in a safe manner and not have to kind of put yourself in the way of where price could be? I don't like that long there at all. But yeah, yen's a tricky market. I might eat my words in the next month. We might get a huge continuation of that yen, and then I'll be sitting here saying, "Yep, should have bought it." But for my personal risk profile, I'm not gonna allocate risk on yen at the minute. It's perfect if you're a trend trader, but I just think you just don't know when those drops are going to come. I mean, you can see already in the price action here, we had a little bit of a drop coming into the market here. You know, that's a little bit kind of interested in terms of if you were long in this period here, you'd have a sharp pullback. Might have been knocked out if you're day trading it. And as you go down, you can see sometimes there's just lots of wicks coming into the market. So there is volatility around. There is volatility around on the yen pairs. I personally just don't want to be involved with it right now. What's your take on Kiwi US dollar short? Yeah, I liked it. I liked it at one point, but then prices just continued to push higher. Bad dollar data has pretty much ruined the idea of being short on Kiwi dollar right now. Yeah, so I did potentially like shorts in around here this week, but yeah, price has just melted through it on the data. So unfortunately, one of those things now where the market is kind of, the positioning on it at the moment is changed slightly. Is this a 4-hour time frame? Yeah, this is a 4-hour time frame. We did kind of come a little bit higher up towards that 61.25 handle, but yeah, I liked Kiwi shorts below this low, but we just haven't seen that follow through against the US dollar. Okay, and again, it comes down to, right, you want to be selling Kiwi. Okay, why do we want to be selling Kiwi? We can see that it's getting weaker in the markets, right? -3 on the currency strength meter. But do you want to be selling it against the US dollar? Well, the dollar is a stronger currency. It is getting stronger. But as we saw, high impact data this week, got to be careful around high impact data. And high impact data hasn't really gone the way we wanted. The one currency pair I really liked the look of this week was Aussie Kiwi. We've been talking about that. We talked about that on Tuesday. I think we actually talked about it last Thursday. To be one to watch for some opportunities, and nothing really else. Kiwi CAD short, but I haven't seen a setup there yet. So really speaking, Aussie Kiwi was the trade you wanted if you wanted to be short Kiwi dollars. And look at that. You know, if you wanted to be short Kiwi dollars, this was the sort of perfect way to do it. On Tuesday, I think we might have pointed out this level in here for a long, which was sort of 1.0960. You can see we came back into that volume zone there. Market reacted beautifully from that level. I didn't take this, you know, but this is something that we did talk about. I wanted to see a little bit more of a lower price coming in. 1.08s, maybe even the 1.09s I would have been happy with. But price has taken off there now. Price has taken off. So if you're looking at, this is the sort of beauty of the FX markets, right? You've got multiple currency pairs to trade. All you need to do is try and find one that's weak, one that's strong, and then look to try and capitalize on that move. And this is exactly that move that you could be looking at. You know, if I bring in the sort of full chart here. Let's go to 90. Right, and we're looking at the sort of line chart here that's been formed. Now, the New Zealand dollar is the yellow line, and the Australian dollar is like a faint grey line, okay? And what you're basically looking for on this is when those two currencies sort of diverge or converge towards each other. And you know, back here, this was the 3rd of June 2024. Actually, it might have been the week after that where we started to see a little bit of a move. So you've got the 6th of June, the 10th of June 2024, and then the week after the 10th of June, we started to see Aussie strength coming into the markets through here. On the Kiwi side of things, we started to see the downside there on the Kiwi. So the two markets were at extremes, basically. And what that gives you is the idea of looking at that market for a reversal setup. So if we just kind of take a quick look at what's going on here after the 10th of June. So if I just pop the 10th of June on the chart here. So that was the 10th of June. That was where the currency strength meter was telling us to maybe look for a reversal in this market. And look at the move after that. you know, we had a little bit of a pullback, but ultimately from that move there, price has rallied 212 pips to the upside. So that's why it's important to, you know, and this is why I talk about it so often, and this is why I use it so often, is because you wouldn't necessarily, if you were just a technical trader and you saw this, right, you're selling this, right? You're selling it because the market is in a downward trend. You're trying to sell it. But if you add that little bit of confluence with something else, you look at the reason why you want to be involved with a market first, then you would have potentially noticed that there could be a reversal here, you know, and then boom, big reversal. Avoid that bit of a loss there. Afternoon, Matt. Hope you're doing well. Rashad, I bought pound US dollar on Monday. Have a look at the dip. Got off early though. Yeah, pound longs on Monday were pretty good. I mean, the whole week has been pretty bullish. You know, this was Monday coming down. Tried to take the lows out of Friday session, failed at Friday session lows, and then has sort of continued to push to the upside here. Yeah, I mean, if you were looking at longs sort of Monday, Tuesday, you would have done very, very well on this market. I was looking at a downside play here, so I didn't actually take anything here, but my bias was essentially wrong on dollar pound this week. I was trying to look for an extension down into this volume area here with the general election coming up. I thought that we would see a little bit more volatility. The only reason we probably haven't is because it's pretty much priced in I might say priced in, but it's pretty much, we know who's going to be taking charge in the UK. So, you know, that sort of risk element of that has faded quite a lot. Then obviously the dollar weakness came in. Dollar data just been very, very poor this week, and that's what's helped kind of drive the pound US dollar prices back to the upside. But this is where I was looking at. I was looking at this 125 handle, 125.50s, and I was looking to see if we would get a sort of reaction in and around that zone for some upside. Just haven't got it. You know, price broke out. My bias wasn't right on this one. The market moved higher, and yeah, it just continued up. So I have to do a little bit more of a deep dive into this, but I mean, I'm not going to deep dive into it too much because we've got the UK election tomorrow. Well, today. You know, I went and voted this morning, but overnight we'll get the sort of the volatility of that. You know, exit polls at 10 p.m. tonight will be something to have a little look at. They've been pretty accurate over the recent years of calling the election, but then it's going to be down to who's going to get the majority. Is it going to be a super majority by Labour? And if that's the case, they pretty much can just, whatever plans they have, they can push through the House. So, you know, it's interesting what's going on in the UK at the moment. But yeah, I think that's where the volatility will come. Will the Conservatives essentially be wiped out, and will we get a super majority of Labour? And how will that impact prices? Now, Labour like to spend. They like to spend money, especially towards services and stuff. But if they're spending more money into the economy, essentially, giving low-paid workers wage increases, X, Y, and Z, then that could potentially create some inflation for the UK. So we might see the UK actually holding rates higher for longer, although inflation has come down in the UK. Do you think price will shoot up from here? I don't know, actually. I'm going to hold my hand up and say I don't know. Because of the election, I don't really want to say it's going to do this or that. It's not smart to think that either. I think we've got to be a little bit on our toes. What I would say is what you probably could do is look at just very big levels on the market. And if you are going to try and trade the election, I would be looking at extreme levels. So maybe up at 128.50 or here. And if price kind of comes into those levels, do we get a sort of a sell-off from those points? You know, if we get a huge sell-off going into tomorrow, where are we expected to rebound from? So you got that sort of 2,500, 2,550. But at the moment, you just kind of trade it in the middle. you know, the reason why that worked out so well is because there were these lows here that were being protected. I talked about this support in the past as well, that was previously resistance that held as support. So yeah, you know, I don't see any value in cable at the moment. The one place I do see some value is Euro Pound. Reason why I like the idea of Euro Pound is because of the sort of difference in the politics at the moment. If Le Pen get a majority, which is looking less likely, but if there was, I think we could see a big shock to the euro, and the euro could see some significant downside. Whereas in the UK, obviously priced in, well, not priced in, I keep saying priced in, but it's pretty much known that the market is looking at the Labour majority. The poll since the announcement of the general election has been pretty much Labour. I personally don't really know anybody that's voting for Conservatives, and that's where I kind of take my data from. I ask people who they're voting for, what they think's going on in the market at the moment, what do they think about the sort of situation, and everyone I've spoken to have said they're not voting Conservative. So it looks like we're going to see that Labour, but it's just if we are going to see that supermajority. But obviously, like I said, pretty much known that it's going to be Labour. And that could create an opportunity here. The difference between the risk element of politics could bring you a trading opportunity. And on Euro Pound in particular, what I wouldn't mind seeing is a little bit of a shoot up first. Now, I've got a couple of levels that I like the look of. Sort of initially, sort of 84.90s. Maybe even higher up in this kind of zone here, so that 8,500 level. You can see I've got an alert set just before that zone. So if price came into here, I wouldn't mind trying to look for the potential short. But the problem is you don't want to really hold anything over the weekend in case you get gapped. Nobody wants to get gapped. Nobody wants to be holding a position over the weekend into this. So yeah, I mean, may see some early downside going into tomorrow. You know, where could the trade be if price kind of comes back up into this area here? That could be the trade, essentially, is what I'm kind of looking at the moment. So we'll see. We'll see if that plays out or not. We'll see if we get that. Would I be trading that? Probably not, because that might come overnight. So I probably won't get the chance to actually trade that one, to be honest. To class, hello. What about long gold? I like long gold at the moment. We've been talking long gold for a week or so, especially after this breakout. We were looking for longs on the breakout, 23.36. I like gold longs as long as price can remain above this 228. Again, this comes down to some commitment of trader report data that I've been looking into. And, you know, I'll just bring it on. I don't know if any of you in the chat do look at your cut datas or anything like that. Let me know. My screen seems to have frozen. So we'll see if this one comes in. Okay. Well, I was trying to bring the commitment of trader report data up, but it's kind of frozen on me. Oh, here we go. Don't know why. I've got 2 terabyte of RAM. Right, let's bring in this. So if you're not particularly familiar with the commitment of trader reports, then I'll just kind of quickly explain what they are. Let me just go over to the futures market here, commitment of traders reports, and we'll just go down to gold. Bring it on screen. Also, guys, if you can leave the stream a like, I'd really appreciate that. If you've enjoyed the commentary on the markets today, you know, it's free to leave a like. I'd really appreciate it if you could. The more likes I get on the channel lets me know that you like what you're seeing, so I can continue to kind of bring it to you. So yeah, please hit that like. But basically what we've got here is the commitment of trader legacy reports, right? And they put it on the screen so we don't have to go through the data. I mean, you can go to the Chicago Board of Exchange website and you can download it from the CFTC, I think cftc.gov. Don't quote me on that. I'll have to kind of double check that. But yeah, if you look at the CFTC website, you can download this data for free and you can have a little look at it and plot it yourself. It doesn't come like this. It comes as like a little sort of spreadsheet thing where you've got sort of open positions from the commercials, non-commercials. But basically, the commercials are in the market for business purposes. So in terms of gold, you know, if you were a business owner and you were buying and selling gold, as price rises, you want to be selling more, right? Because you get more for your money. As price falls, you want to be buying because you're buying at lower prices. Okay, so that's essentially how the commitment of traders, in a very simple nutshell, of how the commercials work. And the commercials are this red line down here. Okay. And the green line here is what's known as the non-commercials. And the non-commercials are in the markets to make money. So they're large hedge funds, they're institutions, they're traders that basically have to declare where they're buying because the size of trades is over a specific size. Okay, I can't remember what the size is off the top of my head. I think it's like 1 million or something. But anything above 1 million, they have to declare it to the CFTC. And that's where we get this kind of information from on a week-to-week basis. Now, for me, this is why I don't think gold's going short right now, because we're not seeing extreme short contracts being formed on the committed trader reports. In fact, we're not anywhere near those at the minute. So, I mean, we're kind of close, but not to a point where I want to see it. So for me personally, I want to see an extreme short contracts building up in my gold, in the gold contracts from the commercials. The reason being is because if we look at last time when we were down at that level, you can see how price reacted. This is a weekly chart, and you can see how price reacted, okay, with this downside move in here. Okay, so I'm looking for short contracts to get to at least minus 307,000. Okay, now on the opposite of that, the non-commercials are going to keep buying because it's in a trend, right? But they're going to buy at levels of extreme as well. And the extremes kind of contracts there are around about 280K. So that's what I'm kind of looking for here at the moment. I'm looking for the price, or the commitment to trade report to give me a signal of when the top in the market's going to come. And I don't think the top in gold is necessarily in just yet. I don't think it's in just yet. I think if we see another little price rally, then we're going to see sellers sell more, right? If you own gold, you're going to sell more because the price of it is high. So you're going to sell more. That's when we might get a little bit of a top in the market, and that's when we could try and trade it back to sort of the $2,000 level, 2,000 sort of 100 area. But at the moment, as long as we stay above these lows, I think we're pretty much good to look for those long positions. Now you can see I've got an alert set back at this area where price broke out. This is a 30-minute time frame. And basically this is where that sort of consolidation built, and consolidation is volume. You know, the markets are basically, when you see this happen, buyers and sellers are in agreement. They're in agreement around these price levels, and that's why you get that chop. Then what happens is, one of them wins. You know, sellers give up in this instant, buyers take over, and we flush higher. So I'm essentially looking to see one or two things. If price comes back to this area here, do the buyers that push price out, do they defend their long positions, or do they add into their long positions for an opportunity to then push prices higher? So I actually quite like longs on gold, but I like them down towards this kind of area here, this kind of 2-3-30s, maybe even a little bit higher, 2-3-32s down to sort of 23-21s. So that zone that formed in your consolidation down on this 30-minute time frame. I like the idea of price coming that. I like the idea of price finding resistance here, but again, it's a consolidation within the market. And what happened from that consolidation? We saw a very sharp selling. Now, what's quite interesting about this at the moment is price is kind of hanging around the highs there. So that could be potential for that to happen as well. A little bit of breakout, then you've got these kind of areas to go and target on gold. But yeah, I like being bullish gold at the moment. I think it's a good idea. I think it's a good idea. for more content. I like the name. Should we buy Euro US dollar? I don't know. I can't give out advice like that. You know, all I would say is we're going into French elections over the weekend where a far right group could get a majority, and that would be bad. That's what I'm going to say. Nice thoughts on Euro Pound. Thanks, Rothschild. Yeah, so that's really all I've got for you today. You know, like the idea of gold. The only other market that's looking pretty good at the moment for some upside is oil. Oil market's performing very, very well at the moment. Still haven't come down into my area of support that I wanted, but we might have missed out. Price might have just tried to and move higher. But oil prices are looking pretty good as well for some upside. Just waiting to see if we get a significant pullback on this now. You know, there's a good sort of seasonal pattern that I learned that the market turns around in sort of early June. And, you know, the market's following that pretty nicely. So we should see this potentially rally up until the start of August, which could see a potential move up into this sort of 87 sort of area here, these kind of highs that formed back in April. So, you know, I'm keeping an eye on that oil move at the moment. But yeah, other than that, not really focusing on too much. Like I said, I like the idea of being a seller of the Swiss franc, like being a buyer of the Australian dollar and the Canadian dollar. Not particularly touching too much. Euro pound I might flirt with tomorrow, depending on the outcome of the UK election and how the market is reacting to that. So yeah, I'm going to leave it there, guys. Really appreciate all the support on the channel today. We've got 35 viewers that I can see at the moment. So yeah, that's awesome. If you could leave a thumbs up, I would really appreciate that as well. If you've learned something new today, hit that like button. If you like the analysis, hit the like button as well, please. I'd appreciate that. But yeah, I'm going to leave it there. Thank you to everybody that joined the channel again and asked a load of questions. We've had some new people coming in and asking questions as well, so appreciate you guys. If you do like what you're seeing, I do stream every Tuesday and Thursday. So every Tuesday and Thursday, I do a stream at 2 p.m. GMT or BST, whatever you want to say. So yeah, it's about 2 p.m. GMT. I do a live stream. So if you want to come join me on Tuesday next week, I will speak to you then. Hope everybody has a safe trading day tomorrow. You know, be aware that there is headline risk out, so don't risk too much. You know, it's all about the long game, not the short game. So fight another day, as they say. So yeah, thanks for joining me, guys. Really appreciate it. Speak to you next Tuesday. Have a great weekend. Hope you have some good downtime, and I will catch you next week. Cheers, guys.